market, um, the value of the stock is determined by the stock market, who are the stock market has this, what they call this one, ready buyers, to buy the stocks that are publicly listed, meaning to say that are ready for selling or ready to be sold by the shareholders of the corporation. So the stock market will guarantee about the liquidity of your investment. It means to say that your investment in the shares of stocks can be converted into cash at any time of the day, from Monday to Friday. So the value of the stock market, it depends upon the perception of the buyer of the stocks, which is the bidder. There's a bidding price, there's an asking price in that. So a lot of factors that are to be considered from the perception of the buyers and also with the sellers. So they have to meet in between. So with the agreed price, and that is the stock market of the shareholders. Now, I mean the stock market price, the shareholders. So, financial managers, they are going to make sure that the stock price of the shares of stock are to be, uh, I mean, at the maximum possible price that is given the resources and the capacity of the company that they have and the projects that they have, or whatever resources and activities that the the executives are doing and the financial managers are doing. So that will directly affect with the stock price of the shares. So again, um the buyers of the buyers of the stocks are looking into what are the um, potential profit that the company can produce based on their current doing. And for example, they have some new product development, and those that product development has the potential that it would create a huge profit in the future. Then it will be the basis to the buyer to buy the stocks. And once the demand is increasing, also the stock price is increasing. Then that's how it works. In figure 1.3, you can see the stock prices. These are the top 10. We're not talking with the some stock exchange in, like, in Singapore, in Hong Kong. Here we just these are the worldwide stock exchange. Like in Shanghai, it has the highest top 10 based on the 2015 data. And yeah, in Shenzhen, these are all in China. And third one is New York. And yeah, we have New York Stock Exchange, and we have the BUTS global market in the US also, and the Nasdaq. So each of these stock market has a specialty when it comes to the industry that are involved. So again, if the company stock or shares of stocks are listed in one or maybe all in this what they call this one in these stock markets, then well, they would be exposed with different perceptions of the players in the stock market. So that's why they have to be careful with their image, what their development, their business operation. So it will affect the prices of the stock. Now, in the shares of stocks, the SEC has to authorize some shares that are to be issued. So it doesn't mean that those shares are already issued. They are still authorized. So let's say you're authorized to issue like a 1 million shares. Now, for instance, you issued meanwhile like 100,000 shares out of the 1 million authorized. Now there are 900 shares that are not yet issued. Now, for if the decision of the company is to, what they call this one, is to issue a new shares, like in addition to the 100 that are issued already, they need to issue another 50,000, 50,000 shares, so that would make 150,000. So that, since the owner of the shares are really new, because that's the first time that those shares are issued. So that particular market that are buying that is called the primary market. Okay. Now, what's the secondary? So, for instance, for those existing shareholders of that 100,000 shares are going to sell to another interested buyer, so that those buyers or that particular transactions are called what you call this one as secondary market. Okay. Now, this is the situation in the market. Um, so starting after the 2005, there are changes, a lot of changes in the how the stock market are are moving. So for one is there is what they call the buyer and the seller, and they have this limit order. It's like that in sending like a bidding. For example, the buyer is putting, like for example, putting an order that will put an exact number of shares at exact uh, price of per share. So for example, the buyer put 100 shares order for the IBM at 138 share. So they call that one as a limit order. So if that is coming from the buyer, it is called limit buy order. At the same time, the seller will also offer something, an order in the public, like providing, for instance, the seller will say that I will offer 150 shares for 140 per share. So that's what we call this one as the limit sell order. So with the difference, the 138 and the 140, the market player or the traders, what they call this one, they can get a what they call this one an income of that. So say for example, um if the if the 130, if the seller is, for instance, is actually selling 150 shares for the IBM at 135. So what the trader will do is that they buy the 135 and sell it for 138 to the buyer. So the difference is what we call the bid ask spread. That's where the trader gains some income. Okay. So meanwhile, if for instance, my previous example is that if the seller of the IBM shares of 140 shares is asking for, or I'm selling for 140, well, the trader will not do the transaction until it will turn into a favorable price for him. So they will put the what they call this one, the shares of stocks on hold. I mean the order to buy 100 shares on hold until such time that the selling price is going down. So meanwhile, since the offer is really very short, so there are a lot of cancellation, like cancellation of the offer of the limit order, and there might be some changes with the asking. So that's why they have what they call this one. Every now and then there are changes, and they call that one as high frequency traders. Um, High frequency traders. So because of the aid of the computers, so it could be done very frequent. Um, so the traders have to monitor the offer, the limit orders, so they put that one on the limit order book. Okay, so they have a large, what they call this one, monitoring screen for that, and that's how it plays. Okay.